Now that you know what a trend is, just to recap quickly, we'll see examples, but an uptrend is going to move from the bottom left of your chart toward the top right. A downtrend will move from the top left of your chart toward the bottom right. But let's take it one step further. You can do this. You can draw these trend lines. So let's go ahead and learn how to do that because they're important. They give us a spot to buy, to add to our portfolio. Comparing companies doesn't really do that. This company's better than this company. This company makes more money than this company. Great. Do we just walk up and buy it? Not necessarily. It's about putting the odds in our favor. Trend and trend line help us do that. They give us a spot to buy. They also give us clues about when to take our profits, when to sell the position. Knowing that this company is better than this one doesn't really tell you when to take money and put that money elsewhere. Trend lines do. They can also add information to your analysis that you don't see from the fundamentals of price, earnings, and ratios. So just kind of the same thing. When this is all finished and you learn this information and apply it on your own charts for your examples and your study, you'll be able to connect the dots and draw your own trend line. More importantly than just having fun, and Jeffrey mentioned printing out charts and drawing by hand. We've all done that. You can definitely do that, but computers nowadays give you this really quick, easy method to do this. Buy signal, when to sell and take your profits, when to sell and if you lost some money, the position didn't do what you thought it would do, the company didn't quite work the way that we wanted, the trend didn't continue, we'll actually stop the losses from getting worse. They also tell us when a trend may reverse, which is that sell signal. We don't want to trade in that trend anymore. We saw this last time. This is Apple on a weekly chart. So that's just what you would see, particularly in your charting platform. Again, the black this time means the bot. So connecting the dot the price did, rising over time. A weekly chart, each dot, and we just connect them with lines, shows what the price was at that particular Friday. Whatever Friday's closing price was, boom, it's on the chart. Just price. And over time, it does move higher. Yes?
So when can you predict that stage 3 downturn?
Oh, I love it. When can you predict stage 3? We'll talk about trend lines. Trend lines, when the stock violates or breaks trend lines, we'll actually see that. The question is, when can we tell? This right here. We'll start actually at the bottom left. We'll answer the question, when can we tell? Just when price breaks through a trend line. So that's how we would do that. And so if we start here and just connect these dots, draw a trend line. But what happens here? This is important. Remember we talked about when to sell a stock? It's kind of a little bit counterintuitive, a little bit. But a stock that goes way, way, way. How do you define way, way, way? You can see in the chart, this is quite a bit. This is the trend line here. So the trend line is about $50 per share at this time, and price has gone to $85 per share. That's way, way, way away from the trend line. Take the money off the table, take your position, take your profits, and enjoy your windfall. We in the market call it a windfall profit. You can also do this. Sometimes a trend line, if the stock gets really, really good and people really, really like the stock and they really, really start buying it, it can what we call accelerate. So if the price way goes higher than this initial trend line, just draw a second trend line. That's very important. Most people don't do that. So you actually have to adjust your trend line as the price goes way, way higher. Now the question was, when can we tell that final stage? When price breaks through a trend line. In other words, it does not hold it, it goes under it. Don't ask questions. Don't go, consult Warren Buffett or your friends or anything. Just go ahead and sell that position because it might. And it's probability. It's not this is going to downtrend or reverse. It probably will. We don't want to take that chance because we can find other opportunities. It may be in stage 3. Or it may just keep going higher. We don't know. And because we don't know the future and we can't, it's just safer to exit with a profit or maybe even with a loss, whatever happens to your position, when price breaks a trend line. And notice that this falling trend line, this happened in 2013, this falling trend line price breaks through it. I put that green and creates this new trend line. This is Apple, again, AAPL. So right now, what is happening with Apple shares? We're not breaking the trend line, but is it close to or way, way, way far away from the trend line? It's way, way, way far. Exactly. So this is probably something we don't want to buy if you want to get into Apple, because it's way, way, way far, and probably, if history is a guide, probably wants to come back down. We don't want to buy a stock that is way, way, way up from a trend line.
Does the trend break because the prices are so high? What causes that?
Oh, a lot of things cause the price to go. It's just the supply demand. So people, same thing. If price is way, way, way up away, people say, oh, I'm going to go ahead and take my profits. And so what happens is when enough people, if there are more people that are taking their profits, they're selling. So they're selling their shares of stock. And so if enough people do it, it's that bandwagon, the herd effect, the price will go down because there will be more sellers than buyers. But what happens if this occurs? If it goes down a little bit and then goes right back up? Same kind of thing, but a price that goes way, way away from that trend line probably will have people taking their profits and being happy and being joyous and counting their money and then taking that to the bank and something else. But if that happens enough, if enough people, funds, traders, investors do that, you will see the stock shift, and that's that third phase, that it will start going down. And if, again, when it breaks this trend line, people are saying, oh no, I thought it would go up forever. Oh no, what do I do? Just call their broker and sell. And in aggregate, and when most people, when the supply demand favors the sellers, the price will trend or keep going in that direction. That's the herd effect that typically does that. Good question. With Chipotle, same thing. They're the same principle. I won't spend too much time on it, but it's the same idea. Except Chipotle went from 50 to 650. Oh, goodness me. So if you can imagine the trend line, maybe we'll draw one here. Maybe it violates this. It's kind of the same principle. Let's go ahead and add that on the chart. So here they are. Now look what Chipotle did. Chipotle, we had to draw a trend line at the start. But look, it actually got better. The trend line accelerates it. We had to draw another or a second trend line here. And Chipotle, actually, this is that way, way, way away principle. Way, way, way. The trend line at this point is about $300 per share. What it would cost you for one share of a stock is $300. But Chipotle was at $450. It's $150 away from the trend line. That's pretty far away. And of course, it came back. Same thing here. When it got way, way, way up, it came back down. Way, way, way up, came back down. And eventually, it broke the trend line and went down for about half a year, if not more. Once it broke the downtrend line, it was okay to buy Chipotle on the break of a falling trend line. So that's how we got into this one. And the same thing, just buying on each of these pullbacks or retracements. We'll actually talk about when to buy a stock next. I won't take up time on this one, but just focus on the trend line. And look at this interesting thing. Chipotle got way up here, came back way up one more time, but it came right back to that exact trend line. That was really cool. These things work because people see them, people react to them, and simply because a price is at a key level, people will buy the stock. So think of it not just in what we do, but in aggregate. What does the market do? What do other people do? And Chipotle is a good stock, strong company, pulling back to a key level. That's going to get people interested, and they're probably going to buy. And if there's more buyers, and if people are excited, they tell their friends about it, the stock goes up. So that's trend lines and how to look at trends and categorize them by trend lines. We talked about uptrends. We talked about downtrends. Let's actually go and see that real quick. This is that uptrend, left to right, bottom left, top right. The downtrend goes from the top left to the bottom right on the chart. What in the world happens if there isn't really a trend? If it isn't obvious, if the price isn't moving one way or the other? What do we call that? It's called a sideways trend. It's tempting to say the word no trend, that this is not trending, which actually isn't true. It's trending sideways. This is Walmart. WMT on its weekly chart again from 2000 until about 2011. So what we see is the price looks like it goes up, but darn, it goes all the way back down. This is 36 per share. This is about 53 per share. And this yellow line is about $45 per one share to buy. So same thing. As Walmart trades up, down, there really isn't much to do with it. So this is probably, if we're looking at Walmart versus Costco or Walmart versus some other retail stock, maybe if they're equal in every single metric, price, all those sort of things, we might decide to go with that other stock, not Walmart. There's a little caveat to that strategy. Can you guess what the caveat is? Where might you, in this type of pattern, where might you buy Walmart? Where might it be okay to buy Walmart? At the middle? Not necessarily the middle, but the green. If it goes into the green, right? The middle is your midpoint. We'll call this the midpoint of the sideways trend. The middle, if you are ambitious, if you're aggressive, if you just really, really want to own this company, you would wait, and it may take some time for it to trade into this green zone. We would call this support. I would recommend staying out of this particular stock, any stock showing this pattern, but if you just have to own this company, wait, put it on your watch list, make a note, set up little reminders. When it gets down to this 36, 37, 38 level, then you can go ahead and buy. But otherwise, I would look elsewhere because a sideways trend doesn't really imply uptrend. Of course, avoid downtrends, but sideways doesn't really give us much to do. I wanted to throw that in as a separate segment to our up and down trend to make it a little bit different to distinguish it. So just kind of to conclude our prior lesson, we would start our chart review analyzing by studying the trend. Hopefully it's up. If not, it's down. But that's other little magic little trend is sideways. We will talk about how to buy stocks in uptrends and completely avoid, stay away from them, a stock in a downtrend. Probably not going to make money, probably going to keep going lower. Consider trading. Now trading means using the chart for buy and sell, essentially for short-term positions, not investment. Investment where you buy and you hold it. Trading is when you, in the case of a stock, you would buy here at the lower spot. Maybe you would sell at the yellow, which is your midpoint. Maybe you would sell at the red. That's considered a trade, not an investment, because it's very short term. It has a specific target in mind, and you're not always looking for this in terms of what a company is. It's just, oh look, many times in the past on the chart, it's gone from this level to that level. If it comes back to green, it probably, although it can't guarantee it, probably will go back to the red. That's what a trade is versus an investment, where we're looking to buy strong, competitive stocks with good earnings, good cash flow, and revenue in uptrends. And that's the thing. So again, just to recap, buying stocks in uptrends, avoid stocks in downtrends, but consider, if you will, if you just must own that company, to buy into that support level at the bottom.